Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now, to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business experts and real estate leaders. Past guests on our show include Aaron Wynn, owner-operator of Wynn Plumbing in Oklahoma City, Jared Goldfarb, the Senior Vice President of Commercial Lending at Bank First, and Brandon Neff, the co-founder of Evergreen Properties, doing a ton of cool renovation projects in Tulsa for long-term lease and hold. Today's episode is brought to you by Chris Lyle's State Farm. Chris Lyle's State Farm office helps you protect your most precious assets and investments, whether it's your home and auto, investment, rental properties, or other valuables. Give Chris Lyle a quick call for a painless way to potentially save double digits on all of your insurance needs. Visit Dial Lyle, that's DIALLILE.com, or call his office at 918-878-7771. Today's episode is also brought to you by Keyrenter Property Management. At Keyrenter Property Management, we do full service property management. And that means we help our clients buy, renovate, and operate real estate assets from start to finish. We help our clients build wealth while taking the headache out of property management. Listen, DJ, as you know, since you're an LP investor in a bunch of deals, it's tough to line up contractors and get make-readies done in a reasonable amount of time after a tenant leaves a property. Contractors are busy, the work seems to drag on forever, and all that leads to loss of rental income. At Keyrenter, we line up our dedicated vendors so that turns can happen super quickly and we get more money back into the pockets of investors just like you. And that's why no matter what rental you have, single family homes, condos, townhomes, apartments, we have the management solutions you need. To go to keyrenterpmc.com or email us at info@keyrenterpmc.com. Our guest today is DJ McClure. He's the VP of Sales and Biz Dev at National Flood Experts. That's NFE. And they drive strategic growth through partnership and tailored cost-saving solutions. NFE has seen consecutive appearances on the Inc. 5000 list and has been recognized by the Tampa Bay Business Journal's Fast 50 list. With a commitment to innovative flood insurance solutions, NFE has saved clients over $15 million in premiums and added nearly $300 million in property value. NFE's team of experienced professionals dedicate themselves to providing nationwide clients with education, guidance, and optimal solutions. DJ McClure, welcome to the show. How are you doing?
I'm good. I'm excited to have our conversation today.
This is, some might call flood insurance an esoteric topic. It's not well known by most people. Most people aren't even considering it, right? I mean, when they purchase a property, they're not even putting it on their radar for diligence. But from your perspective, I'd love to understand, like, what's your history and how you found a passion for consulting on flood insurance solutions?
Yeah, I've always had an interest in real estate. I'm not an engineer, though I work for an engineering company now for 6 years. My background is in the tennis industry. I was a tennis pro for a long time.
Cool.
So worked with, aspiring juniors for a long time. And, having lots of different clients over the years, you just hear about lots of different industries and just lots of things that really piqued my interest. And real estate was one of those items. And so when I arrived in Tampa in early 2017, shortly after, I met this company and was really intrigued and really fascinated by this really niche type consulting expertise that they had built. This combination of engineering expertise and flood insurance.
Yeah.
Those two worlds live entirely separately, in all ways possible within real estate. And our president brought those two worlds together and really overlapped those two expertises. And, real estate being the third prong there, of really thinking, like, how do we help investors add NOI? How do we help them make their properties more valuable using flood insurance cost savings as the vehicle to do that? And so it's been a really fun process all these years, now working with investors nationwide.
So many multifamily investors, commercial investors, and even to some extent, single family investors understand value add opportunities. They understand literally value add, like going in and rehabbing a project. They go in, they understand cost segregation. Why is flood insurance cost mitigation solutions kind of something that's less known about?
I think that's a really great question to start with. So flood insurance is somewhat commoditized, across real estate. You go to buy a property, um, during the lending process, the banks will run what's called a flood zone determination. And they do this on every single real estate transaction.
Wow.
Doesn't matter what type of property it is.
So we don't even, most of us don't even know about this, that it's happening on the back end. We don't even hear about it. Okay, cool.
Yeah, they have to keep this document on file for compliance. And basically it's to show if a property is in a 100-year flood zone or not. It's kind of black and white in that regard. If it's in a 100-year flood zone, legally they have to require flood insurance. And then the type of loan dictates the coverage limits that property has to carry. And so it varies across more of a standard loan or bridge loan versus like an agency type, fixed debt loan. So there's different requirements that come with different loan programs. And so they're so dramatic and so black and white. Like you have to have this proof of flood insurance or you cannot close the loan. Or if you don't, they force place at typically a really high cost. And so no one really questions it. And you're forced to buy this insurance and people just typically renew it, years and years and years down the road. And we've just really disrupted that process and said, hey, actually, there's some solutions here that could help. And it all starts as early in the process as possible.
And when you say that coverage limits change, do you mean that one lender, one loan program will require an actual cash value replacement, or one is the replacement cost? How does that actually change?
Exactly. Yeah. Most standard loan programs are just going to want the maximum coverage that a flood policy through FEMA will issue. So for single family or like a 2 to 4 unit type building, 250,000 is the max coverage that a flood policy through FEMA will issue. If it's a 5 or more units or it's a clubhouse type building, they'll go to 500,000. So a lot of loan programs, they just want you to have that NFIP max, as they call it, the National Flood Insurance Program. You get into some of these other more sophisticated loans, like through Fannie Mae and Freddie Mac, they tend to require full building replacement. They want 12 months of business income for flood insurance or for flood specifically included. So that can make the cost go up dramatically because that gap that you're having to cover, let's say it's $1 million quadplex.
Yeah.
Right. So only 250,000 would be the base, FEMA policy. You have to go to the private market to now go get that other 750,000 or seven. Yes. And that can be quite expensive and it scales. We've had projects recently where a multifamily project had to go to the market for 30 million in flood coverage and their costs were hundreds of thousands.
So let's talk about for a second the basics of coverage. FEMA, the normal insurance market for a single family or for a multifamily property on a total loss, a fire, for example, is a private industry. Why does FEMA step in? Why does the federal government step in to provide insurance coverage for the flood market?
Yeah, so the law was passed back in the 70s that required flood insurance be in place for properties inside of a 100-year flood zone. And so it was, around the same time that a national flood insurance program was then created to help counteract that. So with typical insurance, right, it's all privatized. It's essentially investments of money, hedging risk against, real estate as the product.
Right.
So the companies can choose to offer you a policy or not, right? You can be non-renewed by your property carrier, just because they don't want to write policies in Texas anymore. So with the National Flood Insurance Program, there's a very small criteria that you'd be denied. Like they'll basically give you a flood policy for any building. And so you've always got that coverage option. It may not always be the best price option, but you can always get a policy through the NFIP. And so that's the reason why that federal insurance program exists.
Does that mean that as carriers, as private carriers, State Farm, Farmers, and Hub, whatever, Chubb, whatever the big commercial carriers are, as they leave Florida, that the federal government steps in to actually take on the risk of flooding from the coast in Florida?
Well, those carriers that you're talking about, they're primarily on the property side, right? So they may have some line items to include some flood coverage in certain master property programs, but they're typically not the ones that you're seeing people get their flood policies through, right? So there's a whole industry of private flood carriers that will choose to write policies in some parts of the country versus another. Um, so the National Flood Insurance Program, that's where you probably see 80% of people getting their flood policies from.
Got it. So basically, the federal government mandated it and then said, if we're going to mandate it, we've got to have a backstop program that will always underwrite these deals when private coverage isn't available. Otherwise, people are out. Right. They're doing things outside of the scope of the law, and then we've created a scenario where people are forced into illegal activity. So we have to provide the backstop.
And part of that too is that the flood maps exist for construction purposes primarily these days, and so depending on what the flood elevation is, it'll dictate that construction, the first floor elevation, be so many feet above that flood elevation number. And so then these communities are also given discounts based on their compliance with certain flood guidelines, flood mitigation, flood prevention. And so there's kind of some give and take. Certain parts of the country get really high discounts. But then most recently in Fort Myers, they were found to be out of compliance. Some of their reconstruction that was done, as a result of some damage these last few years, they were found to be out of compliance. And so they actually lost their community rating discount, which was a 25% discount on their flood policies, right? So, there's some give and take. You play ball with the things that they want for helping to make the community as, flood safe as possible.
Yeah.
There's discounts in place. But what you've seen also over the last probably 5 to 10 years is there's been a lot more companies getting into the flood industry on the private insurance side. A lot more options for single family. And then you see the commercial market has really started to grow over the last several years. More people getting in, seeing that there's a profitable market there, and then investing against the risk, in certain parts of the country and certain real estate products.
And essentially, the way insurance works is they identify the actuary, they identify the loss ratios or statistics. They say I can make a margin above it. They like that market for a little bit because it's profitable. They experience a couple of losses or significant losses, and then they decide, the private market generally decides, maybe I don't want to be in that. The numbers I was running actuarially are maybe not as good as I thought, and then they drop out and then they come back and kind of drop out. Is that is that going to mirror the cyclical nature of the private insurance world?
Yeah, it's an ebb and flow, right? Yeah. They're going to go heavy in some markets, completely say no to other markets. And they're always updating those models that they're using. Whereas, flood insurance through FEMA, it has a standard guideline for the most part that allows there to be some standardization to at least how they're rating the policies. You've seen some changes in FEMA's guidelines over the last 2 years. They totally revamped their rating model. And so it's created a little bit more, in the gray now with how these policy premiums are calculated. And so it's made it to where it can be really expensive in certain markets if you're having to buy a flood policy that didn't exist before. So it's an interesting time, to be talking about flood insurance in general.
But let's talk a little bit about the nuts and bolts of it. The property floods, you go 6 feet into the first floor on this. Let's talk about this 4-unit residential property that you mentioned earlier. Anecdotally, you've got to go in, you've got to rip out all the sheetrock. That's the work that the insurance covers. Is that right? Or are we talking about
so they have guidelines, right, for certain types of damages that will then pay out, certain types of coverage limits, up to the maximum for that building. And so that's not something that we specialize in and really get involved in too closely. Yeah. But the big point to understand there is that there is a max that they're going to pay out for that building. And so that's where, when you talk to your insurance broker, just a disclosure, I'm not a licensed insurance broker. So as they're working to decide how much insurance should they place on that particular risk, that quadplex unit, that might be worth over $1 million if something were to really happen. So you may look and talk to your broker and say, yeah, I can only get 250,000 through FEMA. Do I want to put something supplemental in place should the damage go beyond that 250 number? And that's really where you just have to hedge the risk of your investment.
Yeah. So in the general process of getting insurance, if you're going to ride it through the NFIP, you called it, if it happens that way, is it going to be a commercial carrier or a State Farm or residential carrier? I guess they're called. I don't even know. That writes a policy underwritten by FEMA, or do you go directly to FEMA to get this policy written?
Yeah, there's several different carriers that will write through FEMA's program. So Assurant, Selective, Right Flood, Hartford. I mean, there's several. There are some brokers that go through what's called NFIP Direct. In theory, you should be getting the same dollar value from any of these different carriers.
Okay. Interesting. So what National Flood Experts, what NFE does is review predominantly on commercial real estate and multifamily is my understanding. Correct me if I'm wrong, but you guys go in, do an assessment, determine what somebody's paying for flood insurance, if they are paying for flood insurance at the time, and then do a bunch of back-end work to petition FEMA or the carrier to reevaluate the status of the property. Is that right? It could be that we argue that it's actually not in the 100-year floodplain. We need to update the maps. We need to do a bunch of stuff. And then as a result, the cost of the operations of the property reduces. Is that generally the theme?
Exactly. Yeah, we've built out this really robust review and engineering audit that we do on every property. And so it's that process that really has this intention and end goal of creating a cost savings one way or another. And it, like you described, it's really those two buckets. It could be on the flood zone side. It could be on the flood policy side. And, so with FEMA having this standard guideline, if we find that there's something in the rating that we can optimize, through the data that we have found, we can go to the carrier and say, hey, actually, we'd like you to rewrite this policy. Here's all the data to prove that. And then they will lower, the full risk premium of that policy. And then equally, there's a checks and balances that exists for the flood zones. All your local counties are managing their flood maps as they update every 10 to 15 years, most parts of the country. There's properties that, when you do an engineering analysis, they may be outside of that criteria. And so you go to FEMA with the engineering to show that. And instead of being included in the 100-year flood zone, now FEMA will issue a map amendment specific to those buildings. And now when that lender does a flood zone determination, it will show as an X zone. And, for example, not required for flood insurance any longer.
And so how does FEMA even base their 100-year flood map? Presumably it's based on when the last flood was. Is that generally accurate, or they have more? Obviously, they have more sophisticated modeling of it. But is it as simple as saying this property last flooded in 1920, therefore in 2020 you haven't updated your model since 1999, and therefore we need to bring up the moving date, or is it something different in a simplistic way?
It's kind of an antiquated. Yeah, it's kind of an antiquated naming of what they call it. But what they're doing in most cases, they're looking at all the infrastructural improvements that have been done. Construction moves faster than the flood maps. Yeah. A new multifamily unit or a new neighborhood could go up in a couple of years, and that all changes the flow of water. Yeah. So in a nutshell, they're looking at the flow of water in all these different areas, drainage, where water should go, if there is a surplus, all these different variables. And they're really trying to build out a flood model for where they think water will go in these more extreme situations. And then they are doing a digital, overlay of what that looks like. And then determining that within this area, we think that the flood elevation would reach 9 feet. And so again, those those models and that work takes several years to put together. There's several years of appeals at the local and federal level, so that's why they really don't update too often. But that's why they also have these appeal processes that exist, either for going in and doing a full map revision yourself, where you go in and say, actually, we built this property, we changed all these things, we added some dirt, we added some ponding, all these different things that change the flow of water, and you can have a flood revision done.
Right.
This is more like a 9 to 12 month process. Then on the faster side, you can do it at the building level, and you can say, actually, my particular set of buildings, here's the engineering to show that they're outside of the current 100-year flood map.
Right.
That's a map amendment type scenario. It doesn't redraw the flood lines, but it just removes your particular set of buildings.
Got it. DJ, some folks that may be listening might wonder, how do they actually find out whether a property is in the flood zone, something that they're investigating, or maybe a property that they don't have any debt on? What's the easiest way to find whether a property whether a subject property would be in a flood zone?
Yeah, I mean, you can go and pull up FEMA's flood layer. If you just Google MSC flood map, it'll take you to FEMA site, and then there's a link on there where you can click to their viewer. It's a little bit better website. And so when you put in an address, what you're looking for is to understand the differentiation of what you're looking at here. So this blue area on the left, this, which kind of looks like water, right? Yeah. The blue area is the 100-year flood map. Now, this brown area that you see, you don't always see that in every scenario, but the brown area would be what they call the 500-year flood map.
Okay.
It doesn't really have any importance in terms of lenders. You do have some parts of the country that will require certain construction to be higher than the 500-year elevation.
Wow,
but for most cases, what you're really looking for at this stage is, am I going to be required for flood insurance on this property I'm looking to buy? So anything that this blue area is touching, even in the least, right? So if we kind of just go down the map, you can see that some of these buildings are even only 25% touched by the map, but they're going to be required by the lender in every single case. Now, over here on this eastern side, you can see this raw land scenario. If you don't see any color, it's not in the flood zone. Okay. By this map's purposes. It's important to understand too that anything can flood in reality. You have infrastructural failures that can cause water to back up or rise.
Right.
So the flood map's usually an indicator more from the lender side. You always want to have a conversation with your insurance broker, to understand the true risk of that area.
Interesting. So you go to the website, type in an address, and it's as simple as that, finding out whether you're in the flood zone.
It really is.
Easy. Good to know.
Yeah, I encourage everyone to do this as soon as you're thinking about buying something. Make this part of your initial checklist, so that way it doesn't get overlooked, doesn't come back to bite you later in the buying process.
When you're talking, I keep thinking about the Katy Prairie and outside of Houston. Houston's obviously prone to flooding, and the Katy Prairie used to absorb a ton of water, and now it's all subdivisions. I mean, when I was a kid, we used to go out to the Katy Prairie to hunt, and now it's all that Bass Pro Shop went in there, and now it's all homes. It's all essentially, track housing. I don't know what you call it, like, commercial build home production builders, and that would dramatically affect water absorption as prairie becomes concrete and asphalt, and it has to run somewhere. So does the reverse must also change. Instead of getting buildings out of a flood zone, they must now say, hey, we absorbed all this water formerly, and I don't know how to quantify water, hundreds of millions of gallons of water that rained every year on this 60 section area of land is now being diverted somewhere. So all these homes are now more prone to flooding. How does that work, that the upgrade actually ends up harming?
That's a great example. Yeah, that's a really good example as to how development, and infrastructure changes the flow of an area. So, I mean, Florida, for example, right? We've got Disney. Disney was built on a huge swamp.
Yeah.
All of that Orlando area was, low-lying water areas at some point. And so this is what the flood maps help to dictate, right? So we do a lot of projects in Katy. We're super familiar with that area specifically, and all of Houston, really. And so that's where some of the permitting guidelines will dictate how the construction is done so that a development isn't built and then all of a sudden is flooding all the neighboring properties. So
Yeah.
everything is built with the question of where will water go? Um, it's funny working around engineers all these years, like you don't look at buildings or roads the same way anymore.
Yeah. Yeah.
You notice how the road is always sloped and things like that. But yeah, those areas, they're going to do some mitigation efforts while they're building those because otherwise they wouldn't be approved projects. And that's why you can't just go into any piece of land and just add 4 feet of dirt and decide to build, your structure on top of that. There has to be some checks and balances. That's what your local floodplain management in each community is really spearheading. But with newer construction, a lot of times they are mitigating some of these things. And so the flood map doesn't automatically recognize that development. FEMA at the federal level, they don't know that you built this new apartment complex and you did all this grading adjustments and this, built these ponds and all this different, drainage infrastructure. And that, that property may now be outside of the criteria of the flood zone or that particular flood map.
Right.
So that's why going in, someone like us at the building level and then kind of being that intermediary between what's going on at the local level, at that building specific level of detail, with the federal flood map.
Let's talk for a second about when a client would engage NFE. Like, when does it make sense? And maybe we start on a single family level and move up to multifamily and then commercial. At what point of insurance costs does it make sense to really engage NFE to do a study and potentially petition or lobby FEMA to make changes or the insurance carrier to actually update the policy?
Yeah, I mean, in an ideal scenario, you'd be looking at this, before you even have a contract in place. Like, you want to understand, am I buying a building or set of buildings that are in a 100-year flood zone? It's not something that's usually on the initial checklist, right? Someone's looking at the T12, what's the insurance per door, what type of value add, type projects can I do to get the biggest return, increase my rents, et cetera, right? So flood insurance is not usually in that initial thought process when I think it really should be.
Yeah.
And this is really the same for any type of real estate. Doesn't matter if it's single family or if it's, a 100-unit multifamily property.
Right.
You can identify it earlier in the process. You can also plan better because, especially if it's single family, that seller may not have any debt on the property. And this is sometimes even the case for commercial properties. And so you're not even going to see that a flood policy has been in existence. And so a lot of times that gets misunderstood to be, well, okay, the seller said there's no flood insurance, so it must not be in a flood zone. Yeah. Which is oftentimes not the case.
Potentially a big liability that you're taking on once you have to start paying that premium.
Yeah. So you've either built your offering price or your underwriting around certain, cost variables or cost estimations. And then you get later into the buying process and you get that notice from the lender, usually a few weeks before closing. So then you're scrambling and it's hard at that point for your insurance broker to even find the best options. But also this can be done at any point in the life cycle, right? It's not like you get a different result if it's 2 years into owning something. Obviously the year over year impact that you're realizing, maybe a little bit less, but all these solutions can be executed, really at any point.
But so you might say, I paid 2 years of $10,000 worth of insurance. That's water under the bridge. Now I've got a review for my next 2 years.
Correct.
Right.
Yeah. Because any solution that's executed automatically has a year over year impact. It's not like petitioning your taxes that you have to do every year. If we go in and change the flood zone, or if we go in and rewrite the policy, the way that, again, FEMA's program specifically, the way it's structured is if the cost is brought down, there's only so much of an increase that they can put in place every year. They have a cap. Mm-hmm. And so then you can really forecast out what those next several years of ownership look like, at least from an expense side on the flood insurance.
So if I'm a single family homeowner and I discover that I'm in a flood zone and I'm paying flood insurance, What cost of insurance annually makes sense for me to come into NFE and say, I got to get this changed. I got to figure this out.
Yeah. I mean, if you're paying under, really, if you're paying like under 2,000 for that particular single family, um, there may not be a whole lot of reduction that you can see. Um, there used to be some more standard pricing that existed years ago that would be even as low as like 500 a building for
Yeah.
single family. And those pricings just don't exist anymore.
Yeah.
So we're seeing a lot on the lower end, somewhere between maybe 1,000 to 2,000. So if you're in that range, there probably isn't a whole lot that can be done from a cost saving standpoint. Now, obviously, if it can be taken out of the flood zone, you can eliminate that policy altogether if that's what you would ultimately like to do. Right. So if you're
And that's
somewhere,
savings forever, basically. So good ROI there.
yeah. So anything in that ballpark or greater is definitely worth looking at. And honestly, that'd be kind of similar for commercial as well.
Wow, that'd be similar for commercial.
Well, if you're in that 2,000 a building ballpark,
Yeah.
there may be something that can be done, but it's not going to be super dramatic. The
Yeah.
only
Okay.
difference between a single family case and that of a multifamily is obviously the multiplier. If I can go in and reduce even by 500 a building times 20 buildings, that's obviously a still pretty sizable impact to the NOI. 500 savings on a single family, it's not doing as much to the valuation necessarily for that property.
Yeah. Let's talk about flood insurance as a negotiation technique. I mean, a lot of people use inspections on a single family or multifamily property. They would use inspections as a negotiation technique. If you find that the property that you're buying, despite not having flood insurance, because in the scenario you mentioned earlier, the seller doesn't have any debt on it, wasn't required to have flood insurance, that it needs flood insurance when you purchase it. Do you see people making, if they bring this up early enough in their transaction life cycle, that they would use this as a technique for actually lowering the cost and saying, hey, I can't offer 1.7 as I was before. Now I have to offer 1.5. Does that happen?
Absolutely. See, this is where you're tapping into our investor brain. We like to say we have our engineering brain, our flood insurance brain, and our investor brain.
Yeah.
And, we work with both sellers and buyers because, to take a step back, if you're a seller and you don't have any debt, I will bring up and say, look, well, your buyer is going to have a flood insurance requirement. They are going to negotiate this against you. So if we're able to mitigate that before somebody lists the property for sale, then we're helping them defend their sale price. Right. And then if on the buyer side, if we're able to say, look, this is going to be, a required cost for you, definitely they're bringing that up to the seller and they're trying to negotiate down the price because in reality, the valuation of that property is less than what the seller is trying to list. So in a sense, if we have a solution also to then help mitigate that cost, now it kind of becomes a two-way benefit. We've seen cases where they're able to negotiate down the buying price. And then we also have a solution that we're executing behind the scenes. This is where you can get some, in some cases, fairly substantial hidden NOI, that you're able to realize day one.
Interesting. We've had a bunch of land acquisition people on the podcast. They come in, they buy land for cheap, they flip it. Seems like a good business if you're deep into that world. My question is, would people ever buy land without understanding that there's floodplain implications, try to sell it, flip it, and be met with these constraints and not having known that there's somehow a parcel that they buy, which could be a section, it could be certainly 100 acres or whatever, not understand that the value that they're paying for is not what the actual value is because of the floodplain mitigation, and whether there's some connection there. Do you deal with pure land speculators?
We do. Yeah, we see that quite often. Typically, if a piece of land is much cheaper than everything around it, there's usually a reason.
Yeah.
In our experience, a lot of times it's the flood zone. You've got types of flood zones that are very difficult to build in. And so if they've not been developed and it's like a prime piece of real estate, you really want to dig deeper because we've had some instances where somebody bought something and then came to us after, and the flood zone really, really restricted, what they're able to develop and build in that area. But then inversely, like we've had cases where, there's pieces of the land that as it stands today, we could go in and carve out the meets and bounds and actually get that piece taken out of the flood zone. Now you're building with X zone permitting guidelines versus the flood map. We've also coached, scenarios where we see that there's opportunity within certain areas, helping them to set the grading plans in a way that we'd then be able to also carve out additional area out of the flood zone. So that we see this with land flippers. They may go in, do some modifications like this, get it entitled for a certain type of development, and then sell it off, in that way. So yeah, that can be profitable for sure.
I don't recall anybody mentioning floodplain issues when I interviewed him on the show, but that's definitely something to consider. Let's talk. What do you do for continued personal and business development? You listen to podcasts? Do you read books about floodplain management? Do you do other stuff related to real estate?
Yeah, I mean, I like real estate. I'm a LP investor on the side in projects myself. So I go to a lot of real estate conferences, both for work and for myself. It's kind of, I guess, a side benefit, of networking within that industry for clients. Listen to podcasts from time to time, listen to audiobooks when I'm on the golf course. So
you've traded tennis for golf? Or you're doing both? True man of leisure.
Well, I lived on the tennis court for a long time. And so now, I feel like my ceiling's a lot higher with golf. It takes a lot more work to play at a level of tennis that mentally I find acceptable.
Yeah. How many days a week are you able to get out?
Oh, on the golf course?
Yeah.
I mean, in Florida, you can play year round. So I'm usually hitting golf balls, hopefully a few times a week. Yeah.
It's a great business development tool, frankly, if you have larger clients. A lot of my friends play golf for business development, and I find that I have anxiety being, like zen for 4 hours and just hitting a couple of shots. But my friends that do business development on big solar projects and other things say that there's nothing better than having a decision maker on, alone time for 4 hours. You really get a lot done. So maybe I'm in the wrong industry for a golf career on the side.
Well, there's always retirement.
There's always retirement, and they'd be in Florida or Arizona, as we were talking about earlier. DJ McClure is the VP of Sales and Business Development at National Flood Experts, NFE, who drive strategic growth through partnerships and tailored cost-saving solutions. NFE has seen consecutive appearances on the Inc. 5000 list and has been recognized by the Tampa Bay Business Journal's Fast 50 list. With a commitment to innovative flood insurance solutions, NFE has saved clients over $15 million in premiums and added nearly $300 million in property values. That's via the kind of savings and then cap rate valuation that we talked about earlier. NFE's team of experienced professionals dedicate themselves to providing nationwide clients with education, guidance, and optimal solutions. DJ, I knew nothing about flood insurance, and it's been a pleasure chatting with you about it. And I hope some of our listeners will have learned quite a bit about flood insurance, what it is, and how to mitigate some of those costs. We appreciate you being on the show.
Absolutely. Thank you very much.
Thank you. If somebody wants to reach out, I forgot about this. If somebody wants to reach out and find it, they can clearly, on your background, it shows National Flood Experts. They can just Google National Flood Experts. Is there any way for them to get in touch with you directly if they have questions?
Yeah, they're welcome to send an email to info@nationalfloodexperts.com. They can find me on LinkedIn, DJ McClure, MCCLURE, as always,
cool
to clarify there. And yeah, happy to help any scenario.
Awesome. Love it. Thank you very much for being on. We appreciate you.
Thank you.
Take care.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.